Well, for more insight into China's auto sector, earlier I spoke with Joel Backaler. He's the author of China Goes West. I started by asking him what's behind the market drop.
I mean, things are slowing across the board. It's not just the auto market, but it's the economy as a whole. If you look at a lot of the things that have typically been a competitive advantage for China, things like cheap labor, low energy costs, all of these are rising. And so in addition to that, you have a hyper-competitive market where local Chinese competitors are going up against Western competitors for the same Chinese consumers. So the market itself is extremely difficult. And as a result, a lot of these Chinese firms are starting to go overseas where they can tap into other markets for emerging markets in Africa and Latin America, or also in advanced economies.
We have seen the automakers offer some incentives, Joel, like zero down payments, interest-free financing. Has this helped at all boosting sales?
Surprisingly not. You think it would. I mean, the challenge with the Chinese consumer is you can't just compete purely on price, especially as you're looking at cars that are, in many cases, the first purchase that many of these consumers are making. It's unlike the US or Europe, where consumers have a long track record of purchasing a lifetime of cars. This is a big purchase for Chinese consumers, many of whom are adults that are just getting their licenses. So as you look at whether they're going to choose to get a car, a lot of that's impacted by factors beyond just price. They're looking at things related to their disposable income overall. And if you're looking at the stock market, I mean, that's certainly impacted some of these consumers that otherwise would have felt much more confident purchasing an automobile.
They've gotten really creative. For instance, Alibaba has teamed up to do an online platform for selling vehicles. Were you surprised it hasn't made more of an impact?
Yeah, there's no doubt that in China, e-commerce is one of the hottest sectors across the board. But when we're looking at the auto sector, I think we need to differentiate between the automotive parts and services and then selling cars online. If we look at the parts and services, there are a number of Chinese companies that are successfully doing this extremely well. However, if you look at Chinese companies or companies overall that are trying to sell pure cars online, I think it's a different situation. Companies like Tesla, companies like Smart, that have sold or tried to sell cars online on Tmall and JD.com, these are effective more so for marketing pushes. They're not the primary channel that Chinese consumers want to purchase, again, that first automobile.
So, Joel, who is benefiting from China's downturn?
I think what you'll see is companies that are looking more and more at going outside of China. There's no doubt that China is the largest automotive market, but at the same time, companies that are singularly reliant on this one market are going to face some difficulties, especially as the market continues to fail. So Chinese companies that are ready to look out, look at a company like Wanxiang. This is an automotive supplier. I was just at their factory in Hangzhou, China last week, and they've come up with a car that's fairly competitive in the electric automobile space to take on Tesla, both in the US and overseas. So these Chinese companies that are willing to step outside their comfort zone and look at other markets, I think are going to be the ones that are successful. So I think companies like Geely, Wanxiang, Chery, these are the companies that are going to be successful because they're not focused exclusively on the Chinese market. And I think that's what we need to be watching.
So lastly, Joel, and quickly, when will we see a bounce back in the China auto market?
I think we're going to have to wait and see. I think overall, China is incredibly important to the auto industry overall. Every American automaker, every European automaker looks to China as a key market in their global portfolio. So we're going to have to wait and see kind of how the market recovers when it can, and especially as you look at a lot of the fundamental drivers that once fueled its growth, again, the cheap labor, the cheap energy costs, these are going away. So how are they going to compensate, and how will the market adjust over time? That's what we need to see.